the numbers for Broadcom, $1.24, which is a beat on its bottom line. The estimate was for a 120 adjusted revenue of $13.07 billion, which did also come in higher than expected. Did it beat some of the more loftiest expectations out there? That will be key. Hock Tan, who is the CEO of Broadcom, some comments here in the press release. He talks about how the third quarter results really reflect continued strength in the company's AI semiconductor solutions and VMware. They expect revenue from AI to be $12 billion for fiscal year 2024, driven by Ethernet networking and custom accelerators for AI data centers. There's been some working estimates across Wall Street on that AI revenue projection around 11 to over 12 billion. So that will be something that will be debated as well. He goes on to say that the transformation of VMware continues to progress well. That was something that Wall Street will want more clarity on when the company's earnings call begins at 5 p.m. Eastern. John?
All right, I'll take it, Seema. Thank you, Seema Modi. So, Stacey, we're going to go to you for those results because it was a beat, and it also, in terms of the revenue from AI, that's a raise to $12 billion for fiscal 2024 from, I think, previous guidance of $11 billion. Your thoughts?
It is, yeah. Look, I think it looks good, and the other, I know the stock's down a little bit, but the other thing important thing on the AI side is that the margin guidance, especially the EBITDA guidance into Q4, looks pretty strong. They're guiding 64. The street was around 62.5. Part of the issue with some of the AI revenues, the custom chips that they're making for the hyperscalers, they too tend to have lower margins, and so the margin guidance to me looks fine. So, I mean, we'll see what they say on the call. But at first glance, this looks decent to me. Again, the stock's down a bit, so maybe the first reaction disagrees. But my first glance at this looks pretty good.
Here we have the current stock market update for Broadcom Incorporated, stock ticker AVGO. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below, so that other traders will be able to find this information more easily on the platform. So here we have the 1 hour price chart, and as we can see, the stock is definitely trading lower despite posting positive earnings results. This is starting to become a theme overall within the tech space this earnings season. So in this video, we will be looking at some very specific price levels that can be used to hopefully identify some profitable trading strategies here for this stock going forward. So as we can see here, the broader trajectory here, the trend that's being seen in most of the market is negative within the tech space. This is occurring even after many of these major companies are reporting fairly strong results. There was nothing really in the Broadcom report which suggested that there was imminent danger or stock prices that were ready to start declining rapidly. Yet to start this trading session here, we can see that share prices are gapping lower and by a significant degree. So we can already see share price lows coming in at 137.02 would be the near-term low. And then in addition to that, we have a very significant price gap here, which essentially formed the top of the price gap now is seen at 152.50 roughly. And then now the top of the bottom candle here comes in right around 143.40. So, this is a price gap of nearly $10, which is fairly significant for what is normally considered to be a stable company, stable stock, stable investment. So this is a very significant price movement here, even though we have seen positive earnings results for the most part. So, this is starting to become a trend here. And what this does mean is that shareholders in any of these technology companies need to start to brace for impact a bit, be a bit cautious in positioning. In other words, this really means don't get into excessively large positions here based on earnings information at least. I mean, that at the minimum would be a requirement currently, because as we can see here, this price gap has already started to damage the chart quite significantly. Within this price gap, what we can currently see here is that share prices completely skipped over the 61.8% Fibonacci retracement of this prior ascending move that we have been watching for this stock. Essentially, this comes from the lows of 128.50, which would have posted during roughly the beginning of August, roughly August 5th, extending to the recent highs at 172.42, which posted during the August 22 trading session. So if we look here, what we can see is that the share price completely gapped over the 61.8% Fibonacci retracement. At some point, there is going to have to be a suggestion here that this gap will need to be filled. So there is some potential here for some fairly significant topside once share prices start to stabilize. However, what we're probably going to need to see here will be stabilization within the broader market itself. Many of these stories are not stock specific. Many of these declines are not stock specific. And the market does seem to be shrugging off or ignoring positive earnings information that has been released by major technology companies here. So if we take a look at the indicator reading, we see some additional reason for concern here because the recent attempt to start to build positive momentum in share prices has now recently been broken, as we can see here. So we have now moved into fairly heavily oversold territory. The indicator reading in the RSI is right around the 20 mark. So this is a fairly strong, level to the downside to be seeing. Anything below 30 would be considered oversold. So, there is some potential for a bounce here, but it's fairly obvious at this point that you're really looking at a volatile trading situation where the market is completely ignoring positive earnings results. Overall, the trend momentum here is still focused on the downside. So this is a stock that might not normally be viewed with caution, but at the moment we can see here that there are some real reasons for concern for anybody that's currently trading Broadcom.
I'm looking a little bit through the lines here. Infrastructure software was expected to be at $5.55 billion. It's right about at 5.8 versus expectations. Infrastructure software seems to have performed better than semiconductor solutions. How do you feel about that?
Yeah, that may be part of what's going on here. So, one of the big questions is what does that AI revenue look like in Q3 versus Q4? They had actually guided for some lumpiness. And so they'll give us some of the segment numbers as we get on the call so we can see the different drivers of the semiconductor business. In general, though, and the issue is but they took the AI guidance. If it's weak in Q3 because AI is weaker, clearly it would be stronger into Q4 because of the overall raise. I would take that. I do think we need to wait for the call to see what's driving this on the semiconductor side. In terms of semis versus software, I'll be honest. I like the acquisition strategy. I like the software strategy. I still think that there is upside to VMware. That's the big business that they just bought as we go through this year and into next year. It's massively profitable business. I'll take it. I'll take it at this point. I think it's fine. And we'll see what they have to say.
To put a finer point on what you're saying, some of the excitement around the stock as being an AI play is more around the semiconductor side than it is around the infrastructure software side. So if the infrastructure software side is what has outperformed in this quarter, and if, you said we don't know yet, we got to listen to the call, the guide being just about in line on revenue at $14 billion is because that core chips business and the AI portion of it isn't outperforming. That could be some of the cause of this initial reaction.
Yes, but they actually gave us the AI numbers, so they're taking that up by $1 billion. Okay. So if there's any weakness in the semi business, it would probably be the core business. The core business has actually been quite weak. They're not the only ones. It's cyclically weak. I think there was some hope that they had cut it enough. I guess we'll find out if they cut it or not. But that is not a structural thing. That will come back eventually. And if the AI piece is making up the difference, I think it's fine. That's been the story as we went through the entire year, by the way. The core business has been worse. The AI piece has been better. It's actually bridged things over. And they're one of the few semi companies that actually has not had to cut numbers as we've gone through this year because of the strength of the AI.
Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.